A failed bear flag sets the bullish tone. So Friday gave us a surprise rally, crushing the bear hopes and propelling SPX through the bullish trigger that we noted on Thursday. But let's not get excited just yet, because there are some signs that suggest a pause before the next move gets going. Let's take a look at the charts. So Friday played out one of the scenarios that we looked at. To be fair, the primary scenario that was being suggested on Friday was the bear flag as a continuation. The overnight futures were off 50 points when I was writing up my analysis and recording Friday's video, but we did see that turnaround quite sharply just prior to the open. We gapped a little bit lower, as we can see there, and then we were straight up all morning right through the bullish trigger. So the failed continuation can act as a very confident bullish setup. Now, the only fly in the ointment is this lazy afternoon retracement. Not necessarily a big deal, but it's only when I look at the daily chart at the top left, we have this large wick on the bar. If I just draw this out for a second, we have this large wick on the upper portion of the daily candle, and that in itself normally suggests to me that we would follow that by a narrow ranging day. So maybe an inside day, maybe a narrow ranging day. Again, it could be bullish, it could be bearish, but it wouldn't be a huge moving day. And that would be my typical expectation. Now, given that we've got the really wide Bollinger Bands, as you can see there, the band width is exceptionally wide because of that bearish breakout. A move into a sideways movement, at least temporarily, does seem the most likely scenario before we see the next big movement. Again, I still remain bullish in the big scheme of things, so a move back up to the prior range and new all-time highs does seem likely. We could still do that before the new year and just recover that lost ground that we saw in the middle of last week. So my game plan is I'm going to expect a short-term consolidation on Monday. I'm going to be looking for that continuation of the, assuming that we get a consolidation, I'll be looking for that continuation higher. Again, I am still long-term bullish. I have some bullish trades on already, and I don't really feel the need to be too eager to place the next trade, especially because we've got a shortened trading week. We've obviously got a midweek Christmas holiday. Tuesday is also going to be a shortened trading day. So we have this stop-start trading week, which again would confirm the sideways movement potential ahead of Christmas. So again, sideways to bullish is where I remain. And again, I think this movement is over. Again, I did speculate on the fact that these big flushes down are often very short-lived, and that's turning out to be exactly the case. If you like what you heard and want to learn a specific entry, exit, stops, targets system using my income system with SPX options, then click the link next to this video and you'll be taken to a free training that I recently held where I outline one of my favorite money-making patterns. And if you click the link, I will see you over there.